Hey guys, welcome to Sunday Stock Talk. It is April 8th at 8 p.m. Eastern Time. Now, before we get started, I want to say thank you to everyone who's been supportive, giving me comments, subscribing. I'm just trying to soak it up like a sponge and improving the channel. And one thing that I really like about the channel is I tell you guys where I buy. I tell you guys where I sell. But in the end, if I make a loss, I tell you guys if I make a loss because I don't want to make the same mistake again. And I try to help you guys. We are a team. We're a group, right? You guys subscribe to me for a reason. We're a group trying to improve our trading process. And I hope that even with our losses, we learn more from our losses than our wins. And that's how we improve. So hopefully these videos help you in the long term as well. Now, let's get started on SPY on the 180-day chart. As always, on the Thinkorswim platform. Now, we left off last Thursday at after market, right here, when Trump's message came out, and the SPY, which was overextended over the 20 EMA, as shown by the light blue bar, retraced back to the 20 EMA. Now, at that time, which was Thursday night when I made the video, I said that there was a potential at the time for it to retest the low at 255 to 256. That was what I was looking for on Friday. Now, here is what happened on Friday. Initially, we saw that it held up very well over the 20 EMA. So you guys could have wondered, are we going to bounce off of that EMA and start going up? So I just want to tell you guys a pattern that I currently see. The candle opens around 9:30 p.m. Eastern Time on the 4-hour candle, right? And it closes at 1 p.m. Eastern Time. So it opens at 9:30 a.m. and then it closes at 1 p.m. Eastern Time. Those two time frames are very crucial because it shows you if the market's moving kind of up or the net movement is a little down. And you guys can see that we opened over here, it went up, pulled back down, and then it closed in the middle. So what did this 4-hour candle tell you? It actually tells you almost nothing because it's an indecision candle. However, you guys should have seen at the next 4-hour candle, which is shown by this candle right here, when SPY fell below the 20 EMA, when it fell below the 50 SMA, those are the confirmations that you need in order to buy volatility ETFs at that point, which were TVIX or UVXY. Now, let me just zoom in at this point. Now, let's take a look. The 50 EMA is located on the 180-day chart, not on this chart, but on the one is around right here, the 50 SMA, right? Around 261.83. And you guys can see that SPY on Friday made lower highs. And that when we broke this low down here, you could have totally bought into UVXY or TVIX and then rode it with the volatility. All right, now that this has happened, where are we at now? My stance is still the same. Have we gotten back to 255 to 256 to retest this support? Not yet. But what are we doing right now? So if we take a look at the futures are currently up almost 100 points. Is that surprising? I don't think it's surprising because let's zoom in on this downtrend. We expect, because ETF stocks don't move in a straight line down, they don't move in a straight line up. It goes down and then it recovers a little, right? Down and then retraces a little. What's happening now? It went sold off and now it's going to retrace a little back to the 20 EMA before then the next sell-off continues. So are we at the low yet? The answer, in my opinion, now, anything can happen, right? But in my opinion, we are not at the low yet. The low is located around 255 to 256. Now, I want you guys to take a look at the pattern that we saw last time. When we had a big recovery, right? We saw a huge recovery, which is the signal of a potential reversal. This occurred on February 6th, where we saw a huge downtrend, but then we saw a massive recovery back up. Now, let's zoom in at this trend and take a look at what happened the next day. Okay? We saw the recovery right here. The next day we see a green candle followed by a red candle, which is the signal of a reversal, potentially. And then the next day is sold off. Let's show you what happened this time around. We saw a massive recovery, which was a potential reversal. We see a green candle followed by a red candle. And the next day, which was Friday, we see 2 red candles signaling a sell-off. Is that a coincidence? I don't think so, because this is all happening near the support. So what, according to the chart, let the chart do the speaking, let the technical analysis do the speaking. What would possibly happen on Monday? We see a red candle, this was on February 9th, that went all the way down to tested support and it bounced up. And the next 4-hour candle was the green overbearing candle. Overbearing means it overtakes the red candle, which is once again the signal of a reversal because we're at the support. And lo and behold, there was a reversal for a couple of weeks that rode all the way up. So what am I expecting on Monday? Now, it might not play exactly out like that, but eventually I'm looking for it to come down to 255 to 256, and I am looking for a candle that looks like this. This is a doji. This is a reversal, potential reversal at the support. Why this kind of candle? Because we know that the markets opened, for example, this candle opened right here. The bears tried to push it down. The bulls pulled it back up, and then it closed higher than its open. That means the bulls won at the support. Same with this candle. This candle is at an indecision candle, but we closed the same price where we opened. That's a positive sign because the bears tried to pull it down unsuccessfully. So have we struck a low yet? No, this candle is not at a support, and it looks like you guys can see this, right? We're kind of in a downtrend again. It's gonna, at some point, in my opinion, test 255, 256. Now, is that gonna happen for sure? Nothing's for certain. So another thing to keep in watch is if we fall to 255 to 256, if it falls below this point, let's say it falls below 255, this is where I call a danger zone. Because if it starts to keep falling, where is our next support? Our next support is around 253. So just be cautious, because once we get to those points, if those points cannot hold, then we're back to the February low. Let me tell you about the position I was in. I was in TVIX the last time I talked to you guys. So here is TVIX. I'm going to show it to you on the 5-day chart. Now, this is what's been happening. This is Thursday, right here. This is Friday, right here. So I told you on Thursday that I bought to TVIX at $9.81, right there where I marked it. What happened right after? There was a massive sell-off. The stock market recovered on Thursday, and we ended up like over positive 200 points. So the reason I bought in here is because I thought I saw consolidation, and I thought the downturn back to its support would happen on Thursday. It didn't. So what happened? Propagated by Trump's news, it went back up. The volatility spiked, and then I was a little nervous. If you guys were watching the charts on Friday, you guys saw the 4-hour candle moving up and down. It was positive at one point, green, and negative at another point. And I was nervous that the market would potentially recover that day. So I sold my position of TVX at $9 and so I bought in at $9.85 and I sold at $9.81. So it was just like 4 cents per share loss. It was perfectly fine. And lo and behold, right, when the market opened, this volatility went down. Now, it went down, but what we didn't expect was it went back up, and then it showed this pattern. So let's take a look at 1 minute. And this is exactly what I was talking about earlier, where it made higher lows. And at 1 o'clock, we know that we are near decision point. Because once again, we're getting squeezed in by this line, we're getting squeezed in by this line, so we're going to see a breakdown or a break up. In this case, we saw a break up, so at this point, we could have bought in at $10.16. I rebought into TVIX because I was in class at $10.31. Am I afraid of my position right now? Not really. Even though the futures are up over 100 points, it could easily come down just as fast, right? So I'm not that afraid. So I'm just looking for, again, a drop to around the support in the near future of 254 to 255. All right, let's talk about a couple of ETFs. The first one let's talk about is /GC, which is the gold-based ETF. Sorry, gold-based futures. So gold more recently has had a support at 1325, but notice this, it's been making lower highs. And we see that this was also a resistance point. So be cautious when you are in the gold-based ETF JNUG, because we're getting closer, really close to this line right here, which is the resistance. If gold goes up and tests this resistance, this is probably the time to sell if you're in JNUG. So let's take a look at JNUG right now. And you can see that JNUG more recently has had a support at this area. So this area is, if I can get this, is around $13, right? But you can see that gold has been making lower highs, just like /GC, and it's been squeezed in. So what do you think is going to happen when things get squeezed in? It's either going to break down or break up. Why take the chance, right? Why take the chance? Now you could argue this way: if Monday we do see it hold above 1373 consistently, you could potentially buy it up to the next resistance, which is around 3.6% profit. But that's a little risky, right? Because even if it goes up, we don't know which way it will turn. So that one, let's hold off before buying, in my opinion. You can still go into it if you want, JNUG. The next one I want to talk about is /CL, which tracks crude oil futures. Now, if you were looking at the markets, you saw that when DRIP, which is the inverse crude oil, was going up, the stock market was going down, okay? So here's crude oil futures. What do we see? It's making lower highs like so. But Gush had a major sell-off, an 8% sell-off. So are you going to buy into DRIP now that's gone up 8%? No, because Gush, for the most part, needs to retrace back to the 20 EMA. We rarely see where it goes all the way down and keeps going down and keeps going down. There has to be some sort of retracement back to the 20 EMA before it goes down. Whether that's overnight, whether that's pre-market tomorrow, we don't know, but that has to happen. So I am looking to get into DRIP as a potential play tomorrow or Tuesday. Now, one more thing that I want to show you guys is we do have a support at 60.31. That's pretty far off, so let's not worry about that support because I'm a pretty conservative trader. It might not fall to that support. Another thing we want to watch is let's track the low as shown by the slanted line. This has been actively shown as a possible support. Look at this area right here. When this support occurred, there was a potential reversal at this area. Now we are here again. We just gotta be careful that when Gush retraces back to the 20 EMA, that we do not buy into DRIP yet, but we buy into DRIP when it starts trending back down. Okay, so DRIP is a potential play, and like always, you know, make sure you guys do your due diligence and do your homework before you go in, because technicals, they can change intraday as well, right? If things swing up and down a lot. So here's DRIP. It's been making lower highs and lower lows. So once DRIP comes back down to maybe $11.15 and it starts bouncing up, this is the time to buy. Because, again, it's buy low, sell high. It's easier said than done. But if we buy low, we can set a stop loss lower than that. But then, right, but it can be like maybe 1% lower, but the potential for profit is like 10%. That's quite a bit. So this is just something to keep in mind as you invest in ETFs, stocks, and let's talk about a couple of stocks that I'm watching. So the first one I'm watching is WYNN. WYNN went down 1.52% on Friday. Not too shabby. You guys can see that there's a support at 174.80 right here, 174.38, and there has been a resistance, a constant lower high. Regardless, you guys can see that once it goes to around 175, that's where you can buy in, because the potential for gain is probably like 3.5 to 4%, but the potential for loss is only 1.5%. That your risk to reward ratio is there. You're looking for a 1-part risk to 2-part reward so that you can get more reward. Even if you get it wrong, over time, maybe over 100 trades, you'll be positive because you're doing this kind of strategy. And this is the strategy that kind of want to help you guys learn and find that discipline to make you set your stop loss and make sure you know where to sell. So WYNN is the first one I'm looking at. The next one I'm looking at is LABU. Now, we talked about LABU last week. It is a biotech ETF. We identified a support at $67.50, and then we also identified another support at around $63. What happened last Friday? We saw a massive sell-off, 8.67%, and now we're back down to this support. So look at this. We are oversold, right? As shown by, you guys can see the forced index, we're kind of bearish. And then down here in the MACD, we can see that it's already, it's also showing a negative signal. But this could be potentially a buy where you could buy it to the 20 EMA line. Now, you may ask, well, why am I taking this chance? Like, this is a downtrending ETF. This does not look good at all. Well, there's a couple of reasons. One, the potential for profit is there, right? If you bought in at, let's say, 67.32, and you rode this up just a little bit, you can get a quick 4% profit. This is in and out, 1-day trade, and that's all you do. Don't hold these ETFs, please. Another thing is we are at the support. That's the second reason, because we are looking for a potential bounce off the support. So those two reasons combined, and third, we're oversold, as you can see. So those three reasons combined, that is a potential buy for LABU if we see a bounce up tomorrow, Monday. All right. The last one that I kind of want to talk about is JCPenney. And the reason I'm revisiting these same stocks and ETFs back and forth during the week is because these are the stocks and ETFs that I'm comfortable trading with. By no means does that mean that you should trade the same ones I do. It's just because I see the pattern and I see the value of trading these, right? So it's pretty much what Ricky says all the time too. So JCPenney has had a very solid support at $2.88. We established that last week, and we saw that when the stock market was doing well, it went up a lot. It went up like 4-6% at one day. But take a look at what happened when the stock market didn't do well on Friday. It dropped the most out of all my list. 4.75% JCPenney. Now, I was looking for this drop. Why? It's because we're looking for a recovery or retracement back to the EMA line. And one thing that I really like is it held. The last hour of trading, the stock market tried to recover a little bit, and you guys can see that JCPenney went below the EMA, but it recovered above the 20 EMA line. That is potentially a good area to buy if we do in fact see it start trending up. Okay, so JCPenney is one to watch, and again, make sure to realize that this SMA line, the 150 SMA, and now you can identify that this $3.39 is a potential resistance. So if you do buy JCPenney at this point, if it's on the uptrend on Monday, then you could ride this up probably 4% if it does go up, and then set your stop loss maybe around 2% down here. So this is just some trading ideas. By no means should you take these trades, but these are the patterns that I see. So thank you again for watching my video. It's been really great to see all the comments and feedback. So like if you like this video. If you didn't like this video, feel free to like it in the future. And I will see you tomorrow, Monday, for a new video. Good luck, and hope you guys make some money.